everyone, and welcome to the Wealth Rooms YouTube channel. Today we have the great privilege of getting to spend some time with Johann Els. He is the chief economist at Old Mutual Investment Group. Yes, he's the big boss. Johann, your bio is so long. If I had to go through that now, it would take us a whole video. So what I'm going to do is I'm going to put your bio in the notes of the video. But today we are going to be talking about what's going on in this beautiful country of ours and the countries around us and how they're affecting us. So Johann, welcome to the Wealth Rooms YouTube channel.
Good morning. Thanks very much.
Cool. So Johann, tell us, what is going on in South Africa at the moment in this crazy time?
Well, it seems like we're all very depressed. Even before this COVID crisis hit us, the economy was in recession. We've had very, very low growth for the last 5 to 8 years. Government's fiscal situation has deteriorated significantly. We lost our credit ratings and confidence levels has just been bombed out. Consumers, businesses, investors, and it seemed that everybody is just getting more and more depressed because where are we heading? And then the crisis hit and growth collapsed even further to unprecedented levels. But fortunately, inflation is very low and the Reserve Bank cut rates, even though I believe they should cut significantly more and they can cut significantly more. But we're in this crisis now and the global economy, fortunately, in that V-shaped recovery is helping. And in South Africa's case, we also see in the very short term this sharp collapse in April in terms of retail sales, manufacturing production, all these economic data measures, but a sharp rebound as well. Now, that's short term because that doesn't help us a lot. At least it's a sharp rebound. The worry is, where are we headed over the next few years? Given all these problems, given IMF loans and worries about full IMF packages, the worry is that, are we going to get out of this downtrend in growth, this depressed environment? Where are we headed? And that's the real question in terms of the SA economy.
Yeah. And I mean, you spoke about the V recovery. I mean, that was touch and go, hey?
Yeah, but the global financial crisis taught us these lessons. And the one big lesson was a V-shaped recovery. And this time around, it was even more sure that that'll happen, the collapse in growth because of the lockdown, and then opening up economies. And we saw this in China. We saw it in the Euro area. We saw it in the USA. Doesn't mean the economy is now going to be hunky-dory going forward, but at least the V was baked in the cake in terms of how things have been playing out. And it's playing out. The V, in terms of all the economic indicators, looks like a V. Sharp collapse, sharp rebound. But yes, that doesn't help us because there's lots of job losses, huge unemployment numbers in South Africa, and we have to work through these issues because, again, where are we headed in the medium term?
Yeah, so Johann, you spoke about inflation, that crazy word that no one's really paying too much attention to at the moment. We're all just focusing on interest rates dropping as low as they possibly can. What should we be preparing ourselves for regarding inflation going forward?
Well, I think in the short term, even slightly into the medium term, late next year, inflation is going to turn out much lower than what most people think. And I know people don't believe me when I say inflation is low, but inflation is year-on-year change in prices. So even though prices go up, they go up at a far slower pace than with what we were used to back in the 80s and the 90s. And I think even the Reserve Bank's forecast will be surprised on the downside with inflation coming out lower than expected. One big example is rental inflation. That's almost 17% of the basket. That is slowing significantly in these circumstances. It's heading towards zero. It might even head towards negative territory. And that's going to keep inflation lower for longer in South Africa. So that allows opportunities for Reserve Bank to cut rates maybe further, although they're very conservative. But I think there's going to be room for further rate cuts.
Okay. And give us a brief overview. I mean, you've given us a nice view of South Africa. The countries that kind of affect South Africa, we've got riots, a big movement, Black Lives Movement, Black Lives Matter movement in the US, and we've got Brexit coming up in December time in Europe and the UK. Do you have any thoughts on that?
Yeah, you know what? these things from time to time have impacts on our markets, little blips. But the big impact on the SA economy has always been what happens in China in terms of economic performance. That impacts commodity prices. What happens in the US, what happens in the Euro area. If you keep an eye on those three big areas, you'll be fairly okay in terms of the sustained impact on South Africa. Yeah, the stuff that you mentioned, Brexit, even back when Greece was heading out of the Euro area, perhaps the risk was there. US elections, for instance, US versus China, political environment, all those things are little blips in terms of the longer term trends. Watch what the economies are doing in those big three areas, because SA is a very small but very open economy. So what happens in those areas impacts on us directly.
Wonderful, wonderful. And if we had to bring your crystal ball out, apparently you've got a very good crystal ball. Where do you foresee opportunities going forward in the future?
Well, if I can share one idea, I think given very weak growth in South Africa, with the prospects in the medium term that growth might not be very strong, even though it might lift a little bit, and inflation surprising on the downside, I think interest rates in South Africa is going to remain much lower for much longer. That's also true in the global economy, given the circumstances. So that will keep downward pressure on SA interest rates. So absolutely, you don't want to be invested in cash. Cash is trash. Returns from growth assets, equity and property is going to be much better in South Africa than cash returns. Stay away from cash. I know you have to have a diversified portfolio, but don't put your money in cash.
Yeah, I'm going to be a little bit sneaky here, and I'm going to see if I can squeeze in one last question. What's your forecast on the Rand?
Oh, good one. I think in the very short term, the Rand is going to be determined by global factors. And global factors, and again, a lesson from the global financial crisis and the way this one has played out as well. At the start of the crisis, flight to quality. Investors take their money out of emerging markets back to the US. Dollar strengthens, emerging market currencies weaken. We've seen that. But as the crisis unfolds and things start to stabilize, but policy remains very expansionary in the US. Very low returns. The risk on trade comes back. Investors look for better returns than what they can find in the US. Dollar starts to weaken, emerging market currencies strengthen. And I think the Rand will again, as in the global financial crisis, get that benefit. So short term, sharp Rand strengthening coming. Whether that's late this year, early next year, don't know to what level. But you can see a 14 handle on the Rand, 15 handle maybe. But that's short term. In the medium term, again, the Rand will be determined by local factors. And that's, are we going to see policy reform? Are we going to see better economic growth prospects? Are we going to see this budget balance being brought back and the debt ratio stabilizing? But in the short term, strong Rand. We don't invest for the short term, but that might create some opportunities. You invest for the long term. 10 years from now, the Rand will be weaker than where it is now.
100%, 100%. Johann, thank you so much for your time today. Before we head off, do you want to impart any motivation to our nation as we are where we are in this world today?
The one area, and I know we're all very negative on policy change. We've been promised policy change before the October mini budget. I think the prospects for policy change is slightly higher than ever in the past. Government realizes it's now or never. The president has said whatever it takes. And yes, it's difficult to get all the social partners to agree, but I think there's a slightly higher than normal probability of policy change. And so the next 5 years growth might be better than what we've seen during the past 5 years.
Wonderful. I mean, that's great confidence. I mean, in the fact that we can look forward to something that's really exciting instead of all doom and gloom. Well, Johann, thank you so much for your time today. We really appreciate it. We know you're a very busy man.
Absolute pleasure. Great.
Awesome. Thanks everyone for watching. If you enjoyed that, please give us a thumbs up. If you want to get notifications of any further videos going forward, hit that big red button called subscribe. And please share it with any family and friends if you feel that it would be valuable for them. Until later, ciao.